Dusty the last couple of weeks, and they are so graciously, their schedule opened up to allow them to come here today and talk to us about one-time construction loans, which is buy the land, get the loan to build, close it, and become a permanent financing. You know, most of us deal with a lot of land, but it's a good idea to hear from lenders, these guys are correct lenders, and how that process works as far as working with the lender and getting that stuff done, so you have a better opportunity to sell something that you're sitting in there.
By the way, there's a big lending conference, real estate and lending conference at the Westin Long Beach tomorrow, all day from 8 to 5. Arnie Garfunkel, who's active in that group that puts it on, has graciously given a table to REOC. So some of us, you will be bringing the pop-up, and I will be bringing marketing materials, manning the table. We're going to make a major effort to get more members for REOC. And so it should be interesting tomorrow. I know Mel is going, I'm going, Chip is going. I think one of the speakers will be John Baker.
Yes.
So I think they give 30% off to REOCers that wish to attend. So I just thought I'd mention that.
Good deal.
There'll be commercial lenders there too?
That's what it is, commercial lenders, and it's real estate and commercial lending conference at the Westin Long Beach.
All right, so if there's nothing else at the moment, we're gonna turn the floor over to Phil and Dusty. Just so you guys know, I've been working with Phil for several years. A real good guy to know, especially when you're dealing with, what do they call them? Oh, borrowers. And buyers, yeah.
Those guys.
Yeah.
Beggars?
Yeah.
So, they've got a good, North American Finance is a pretty good company, a good team behind them. They got a lot of good support. All yours, gentlemen.
Well, thank you. Well, good morning. And, when Greg panicked, in a panic-stricken called about a couple of weeks ago and said, hey, we got an opening, help us out. He wanted us to address the financial impact of the dwindling bee population in Orange County. And I thought, well, maybe we want to talk about vacant land, one-time closed construction, and possibly manufactured home construction programs that we have for that. But anyway, my name is Phil Chenier. I'm the branch manager with New American Funding, that is, and manage the Long Beach branch. And my cohort here is Dusty Lloyd. He manages the Mission Viejo branch of New American Funding. A little bit of background just quickly about New American Funding. Been around for what, 20 years, 19, 20 years. I was branch number 5, and I think Dusty was probably, I don't know, right in that
20, something like that.
Yeah, something like that. We now have 250 branches nationally. We're a very large, privately held mortgage banking firm. We primarily specialize in residential. We've got conduits for commercial stuff too, but our primary focus is the first-time home buyer, second-time home buyer, third-time home buyer. We do reverse mortgages.
Last-time home buyer.
Yeah, last-time home buyer, we do those too. We have a terrific program if you have a buyer that wants to buy before they sell. This is residential, of course. We've got a terrific program called NAF Cash that allows us to buy the property cash and then sell it back to the borrower that really, or the client that really wants to buy it to begin with. In this type of market, it's been pretty competitive.
Oh yeah, I need that.
Yeah.
Way better than contingent
Multiple
buyer.
offers
right now. They have a lot of sellers that want to buy.
Absolutely. And so that program is alive and well. We do really well with that. But today we want to talk about vacant land.
I wanted to hear about the bees.
Fees for
for the bee problem.
Oh, the bees. Bees.
You started with the bees.
Well, Greg, we'll talk about that. Maybe the next meeting. We'll have a slide presentation and no-dose tablets, and you'll have your rubber band gun in case anybody falls asleep. Right? Okay. But anyway, thank you, Greg, for allowing us to be here. And Dusty and I are going to co-op any questions or any loans that you have in the future. He drove all the way from San Clemente, and I headed out here from Huntington Beach, so it was quite a drive to get here. But we're glad to be here, and I'm going to turn it over to Dusty.
Dusty Lloyd, New American Funding. So I used to run the renovation department. Now I just run an office and do sales. I have an extensive background in renovation and construction lending. As New American Funding is headed east, there's not a whole lot of construction crews in Bettendorf, Iowa, or Indiana and rural areas. And so building a manufactured home on vacant land is a big push. Clients are asking for it, and we don't have that same kind of construction problem in Orange County, but in the Inland Empire, there's a huge need for throwing a manufactured home, building a stick-built home on vacant land. And so I'll go through this presentation, I'll say some other stuff, and then you can pepper me with questions. But the first slide, what's one-time closed construction? It means that we'll do a construction loan, it'll convert into a permanent loan, Fannie, Freddie, FHA, VA loan, after the certificate of occupancy is issued and the project is complete. Oh, sorry about that. There's yours. So we'll allow somebody who either owns a lot or looking to buy a lot, or maybe the seller gave seller financing for a lot and we'll pay that lien off. We'll get a construction contract for labor, materials, site prep if it's a manufactured home, the distributor to do that. We talked about they may need to get entitlements for utilities, all that kind of stuff. We can finance that all into the loan and allow them to do low money down financing to build on a lot. So, shoot.
What are your loan to values?
So that's the next one of the slides over here. I guess it's 2 pages ahead. Conventional will do 5% down. FHA will do 3.5% down, and VA is 100% financing.
And that include the takeout loan too?
It'll convert into a permanent loan at the end. So we've got one in Maine. Lady called us. She had a seller carryback for 25 grand lot in rural Maine, and she wanted to have her dad do the site prep, put down a foundation. It already had utilities and a septic system, and she wanted a manufactured home. So she called a dozen places, frustrated. We got it after she had been searching for 6 months, and we got it all done. She's living in a manufactured home, and she didn't bring anything to the table.
Just to add something, this is the traditional idea is a 2-time close where you get a temporary loan for construction, then you take out the 30-year loan, long-term financing. This one-term close, like Dusty said, it's one deal, and it's
And
much
they qualify once, so if something
You do
happens.
the acquisition loan, construction, and then the construction, then the takeout.
Well, we'll put the construction project and the acquisition of the land in one loan.
Yeah.
Yeah. So we'll have to get plans and a contract with the builder in order to do that, which sometimes the seller won't wait 60 days or whatever it takes in order to get good plans together. But
What about an ADU?
Yeah.
Can you do that too?
Yeah, of course. We were looking at doing one in, it was either Menifee or Wildemar, and they had a vacant lot, and they wanted to put a stick-built house with a stick-built ADU in the backyard. No problem. I'm trying to figure out, we did a VA loan out in, I think it was either Fallbrook or Bonsall, and he wants to build an ADU for the kid to live there, because the wife doesn't like the kid. The new wife doesn't like the step kid, I guess.
That's normal.
Which makes sense, and he's probably doesn't have a job, sits on the couch and plays Xbox. They want to build an ADU in the backyard for him, and so we're trying to figure out if we do a VA construction loan or if we just do a second, figure out what the best solution is. So we can also deal with complicated, weird stuff.
Can you take that, Dusty, and with your connections, do something similar on the commercial side?
If we need to do a commercial construction, we can find a solution.
Yeah.
It's not our meat and potatoes, but I have or we have all kinds of sources.
Great.
So the benefits to a one-time close, simplified application process, during the construction the acquisition and construction phase, it's an interest-only payment. So if it takes $50,000 to buy the lot, they're paying interest only on that $50,000. As the money's drawn out for construction, the balance increases, the interest increases for that.
Yeah. I do, land loans.
Yep.
The best deal I could find is US Bank. And US Bank is one of the only lenders that do vacant land that I could find.
Yep.
I've been doing this for years.
Yep.
But they typically require 30% down, and then they will do the construction financing in one lump up to 80% projected value.
And if you
when it's
wanted to
complete,
build a
they
house,
do they convert it to a market rate 30-year loan.
they'll refinance it. If you wanted to build a $5 million house in Emerald Bay, you call US Bank. You want to build a $800,000 stick-built house in Orange County or $500,000 manufactured home in the Inland Empire, don't ever call US Bank. Call us.
Okay, that's the difference. I'm trying to determine.
Yeah.
So you still require, but you don't require the 30% down for the acquisition?
Well, we'll combine the acquisition and the construction financing all in one.
And you do that at 80% loan to value?
95% conventional,
95?
100% VA, 96.5 for FHA.
Excuse me, that's assuming that the seller will, how long typically does it take to get from, I made an offer, I'm making an offer, I'm making the application to funding?
I'd say 60 days is reasonable. I mean, they've got to get plans together that they all agree on, and that can take time.
Yeah, it might take,
Those funds have to be approved to the city before you do it, or?
I don't think they have to be stamped by the city, but they have to be approved by the client and the builder. I mean, they can't change. They can't say, oh yeah, instead of a one-story house, I want to build a three-story house. It's got to be solidified. So the next slide, types of loans, conventional, VA, FHA, and we can do single-family homes, modular homes, prefab, manufactured homes. We can do an ADU per the program, and credit scores are reasonable. It's really a great program. There's not a whole lot of downsides to it. How they work, we're going to ask them, next slide, choose a builder, draft a contract, prepare plans and specs. We're going to need to know if it's a stick-built home, like what kind of finishes they're going to be using, because budget tile and designer 48 by 48 tiles are going to be a difference in price, so we're going to ask them to spec it out. We begin the loan process, get the construction project approved by our partner Land Gorilla. They used to be Granite, and they do go out and inspect and make sure when the draws are being done. Contractor says I've done 20% of the job. They're going to go out and look and make sure that that's good and make sure we can give the money. And then we close the loan, they can begin construction. Some of the things that's important, we don't farm this out to anybody else. The only piece is the Land Gorilla is gonna double check the contract and go out and inspect. But we process the loans, we underwrite the loans, we service the loans. We don't use a third-party correspondent where we send the loans out to them and have them do the rest of it. We administer the draws from our own accounting department. We're headquartered in Orange County, even though our servicing center is in Austin, Texas. I can get the head of servicing on the phone. I send him emails about once a month. Hey, I got this problem with a borrower. Can you have somebody on your team take care of it? And we hired a guy from Wells Fargo, and he's like, you can do that? You can talk to somebody in servicing? They're not gonna fire you for calling the servicing department and asking them to do a favor because your past client is frustrated and wants to drive to India and kill somebody. And I was like, no, we care about it. And 2021, we were JD Power #1 servicer in the country. So we take it seriously. And we're a small independent mortgage bank. We're not allied with any bank or anything like that. So the service matters. It's all we do. And
If I can add something, Dusty and I have been with various companies for years in mortgage banking, and the biggest problem that I've ever had, and I'm sure with Dusty, is that complaints about servicing. Customers going, what the hell? Why did they do this? And you have no idea who to call, everything else. I've never been with a company, nor has Dusty, that will actually contact the customer and ask them how we're doing. And they'll do that on a quarterly basis. Never been with a company like that. So that's why we're the JD Power Rock Stars. Was a couple years ago, year
Yeah.
2 years ago.
And the reason I say that is there are a couple other people in this space. AFR is a big wholesale lender that does construction. United Wholesale Mortgage is the biggest lender in the country, and they just got into the construction space. I've talked to a couple of manufactured home distributors. They won't work with them. And the reason is they don't pay. And I don't know if that's the timeline or getting inspections takes forever or whatever. But if they're on the contract as the financing, the distributor will just balk and say, I don't want to do this. So we have a better reputation, and we can execute.
I have a question. On the, someone's putting a manufactured, in on a property. Do the manufacturers of these modular products have a different home that goes married with this project versus someone doing it some other way? Style, design, shape, anything like that?
It doesn't matter. Most of what's being done now is MH Advantage, the high efficiency homes. Whatever's on their product line, as long as the client qualifies and they can get vetted out as a distributor, we can do it. And one of the other things that's a big gotcha is the distributors don't do the site prep. So it's two contractors, it's the distributor and then the contractor do the site prep, run the utilities out, all that stuff. And we'll allow them to be paid separately as opposed to having one person run the whole project and do the accounting, which is a tough one for a lot of companies. They just want one person to pay because it's easy,
Yeah.
but it's complicated, so that nothing's ever easy.
And here, and where it says, here are all the steps about we managed to find somebody to wait to get paid all this length of time. It says construction begins on your dream home, and then you move in. So the construction begins, and then, that could take months.
Mhm.
And so, they have to make the payment where they're staying, where they're at, and how much, did you say interest only payments in the new home?
Right now, it's interest only at 8%. I think that'll be coming down as short-term rates come down. But yeah, they're going to have to pay it. $50,000 acquisition. They're going to have to start paying on the land portion of it for the acquisition, and then as the construction's done, they're going to have to pay interest only on that, which may be a burden for some. But if they are, this isn't the right program for them.
Yeah. Like how many of these loans do you close, like say in the general area?
Not a whole lot in the general area. There's not a huge amount of these cheap pieces of land. More of it is I want to build an Emerald Bay for $5 million, and that's not our program. But we talked to Greg because he's got a lot out in Menifee, and this is perfect for that. Sell it for, what is it, 75 grand, something like that?
It's about 150, 160.
150, 160, you get a manufactured home for 225,
Yep.
do site prep for 80 grand, 100 grand, whatever it is. You got a deal out there, and it's a deal for the client, it's a deal for the builder, it's a deal for the person selling, and it's an
Okay, so
option.
that's about, say it costs like 500,000, so now, construction begins in the home.
Mhm.
Then my payments start for interest only?
As soon as the acquisition happens for the land, even before they start swinging hammers, they're paying interest only on the loan.
Okay, so then it starts, as you do the construction, and then I guess there has to be a draw somewhere, somebody controls the funds. and-
As the loan balance goes up, the interest goes up.
And
Yep.
all that person still has to make payment on their, that's not for everybody.
it's not for everybody, but if somebody's living in in their parents' house, if somebody's paying reasonable rent and they've got some savings and they want something that's going to be nice, because if they're looking at manufactured homes in the Inland Empire, like there's a lot of dogs there, and there's a big difference between what's being built now versus what was being built in 1990. Like the amount of energy efficiency, the finishes, like it's a different thing. I saw one of these new ones and I didn't even believe it was a manufactured home, and the kitchen looked like a nice model home that you would look at new construction. Like it was nice. And I think people have a lot of misconceptions about that. And if they can get a deal where they get what looks like a fancy house for $500,000 all in versus paying $750 for a dump in Menifee, like that's a win.
And the new ones are doing, I've also noticed, is they're putting, instead of raised above ground, they're taking where the skirting and all the other, there is no skirting, it's set at ground level. So you drive down the neighborhood and you don't even know
You
it's a
don't know.
manufactured home.
Yeah.
How does your program differ for those of us that only dabble in commercial?
This isn't for commercial.
Okay, I'm looking for property in the Barstow area to build storage.
Mhm.
And so you don't have a program for that?
This isn't that. We can help you find a commercial lender to do that kind of stuff, but that's not what the presentation's about. This is for residential construction.
Like for instance, I have a client in La Habra Heights, he has 2 acres, he wants to put an ADU on his property, rent it out.
Yeah.
You can do that probably. You can do the financing on that?
Well, for a lot of people that are in that situation, they got a big house in La Habra and they want to put something in the backyard. He probably has some equity. Most of the time we'd be doing a home equity line of credit for him and have him pay interest only on that during the construction and allow them to draw the money out. That's a lot easier than doing a one-time closed construction for just an ADU in the backyard. We do a lot of
Less
that.
complicated.
Yeah,
Oh, that's complicated, okay.
less complicated. That's a lot easier than doing a construction loan.
I got it, okay.
But let's say,
Let's say they don't have a lot of equity, they can still do it that way, or?
yeah, we have an investor quorum that will do after completed value. So they'll look at the improvements and give them the value with the improvements and do a line of credit for them, up to 95%.
Okay.
And is your program for owner occupied only, or do you, yeah?
We're not doing spec investors. If you have somebody like that, I have somebody that'll do that, but it's not something we do.
Well, you could do second homes on this, couldn't you?
We can.
Second homes, absolutely.
So if they've got a lot in Lake Arrowhead or down by the beach in Ventura, do this all day long. Yeah, conventional. Yeah.
So a VA buyer could actually buy a lot for no money down, really,
Yeah.
and he just hasn't built.
Hmm.
That would be really good.
It's amazing. And we did one in Crestline. They wanted to build their dream
That's a
home.
miracle. I mean, you could buy a vacant lot, no down,
And build it.
and build it, and build on it.
And the government pays you.
Wow.
See, it's pretty,
Government
that's pretty
insured.
good. I have a VA buyer, that's what I was thinking about it.
Yeah, there you go.
And it's really the best program for a veteran.
And FHA will do it at what, 95, did you say?
96 and a half. So 3.5% down. It's not that much.
Yeah, wow, that's great too.
Yeah. So if you have sellers with vacant land, this is something that should be in the mix. A lot of times sellers are carrying back financing for these small lots. That sucks for the seller. This is a way to, once it's done, everybody gets, commissions get paid, seller gets paid, buyer has what he wants, and it will get pushed through construction because the buyer's paying money on the construction loan. So they're gonna be calling the contractor to say, this needs to get done now. Everybody's gonna get what they need out of this transaction.
It's a lot cleaner way to go.
So the buyer pays, let's see, a VA buyer or whatever, pays a monthly payment, right?
They're gonna pay on
On the loan.
yeah.
So let's say the building costs, let's see, what's the average, cost to build, 300, 400 square foot? What is it?
Let's just say it's $300 a square foot to make it easy.
So let's say 2,000 square foot, so 600,000.
Mhm.
So if I borrow 600 grand, I'll be paying 8% until it's built.
on the amount that's drawn out. So if it was a $100,000 lot, they're paying 8% interest only on the $100,000. As the draws come out and the balance goes up, the amount of their interest goes up.
And they pay monthly on that?
Correct.
Okay.
And when does your loan close? If they do the acquisition, you actually don't do the acquisition independent of the construction financing?
Correct.
So it doesn't really close until the house is finished?
No, it closes when they buy the lot and have the construction worked out on what they're gonna do. Seller gets paid, agents get the commission. We have a construction loan that they're paying interest on, and they're gonna do all the construction, and then it modifies to a
So the-
30-year fix.
So the only time delay is getting all the cost to build.
Mhm.
And once you have that done, which may be 60 days, then you can close on it?
Mhm. So what I would tell you to do is if you have a vacant property or vacant land, find a builder in the area. As soon as you're getting the listing, we can vet them out and have a conversation. And that way, we're not scrambling to find a builder once you have a buyer.
Okay.
That makes sense?
Yep.
And there are independent builders all around here that will build. They're not gonna be doing it for $125 a foot like in Texas, but
$300 square foot.
that's reasonable. I mean, materials are, I'm doing 1,000 square foot addition in San Clemente, and just the wood is 3 times what it was 5 years ago.
And do you have a list that you could recommend to builders to use?
I'm not gonna recommend a builder,
No.
This is,
We have to find a builder.
period, end of story, just because it falls on me if I recommend somebody. So it's better if they find somebody locally, and maybe you can suggest somebody in your
Yeah,
area.
you build a relationship with them.
Yeah. And they'll bring opportunities to you as well, once you've brought them a project. That would be my gut feeling about that. There's not a whole lot of people doing these kinds of construction financing in Southern California.
It's not.
So once we kind of get a thing gelling and get transactions going, we'll get a lot more. We've got a relationship with a builder in Texas, and we'll be closing 2 or 3 of these a month.
now you go out of state, right? You go any state?
All 50 states?
50 states.
Yeah.
So I go to Arizona, wherever,
Yes,
any
sir.
place.
Yes, sir.
We did one in Maine, and we just got, that was the most recent one that our office did. And then we just got licensed in New York and Hawaii. So all 50 states, whatever you guys need.
Pretty good.
You were talking about your clients moving from here to wherever. This is the here to wherever loan. So if they want to build in Texas and Florida, put a manufactured home on land, out in the sticks in Alabama, we've done all kinds of stuff like that.
Yeah, I have a client over here that wants to buy a house, but they're having a hard time because they have $1 million equity, but every time they bid, they lose because of the
Phil will do a NAF Cash deal for you. We'll buy the new house all cash. Allow them to sell the old property, and we'll sell them the new house once they've sold their old house.
The great theory about NAF Cash, if you want to present it to your sellers or buyers, is you can buy before you sell. I think a lot of sellers right now are going, I don't want to sell because I'm not sure what I can buy in the future. This particular program will allow you to buy the property. We'll buy the property for them. It's a close, and then they can move into the property while they sell their home later.
And this is something totally different, but
Yeah, totally different.
like here's the example. I had a guy in, there's these 3-story condos right next to Doheny Beach in Dana Point. I don't know if you guys know the project. It's a cool project, but there's, on one side, there's the sewage treatment facility. There's kids going 24 hours a day on their e-bikes past it, making all kinds of noise, and you're right next to Doheny, which is cool. Engineer from Amazon, he wanted to move into a house just to have some peace and quiet. So we bought him a house for $1.7 million in Oceanside, and he's got the house listed in Doheny, and he's already living in the new house at Oceanside waiting for his old house to sell.
Oh yeah, well that's, I would have a problem with people get multiple offers on these houses, especially in Fulton here.
And if you have a cash offer, it's top of the pile.
Yeah, I'm on top of the pile. I've lost like 3 or 4 deals for called cash offers over here in Sunny Hills. Everybody wants it. There's 50 people at every open house.
With this program though, you can have a buyer that has as low as 5% down, turn them into a cash buyer. Seller doesn't know the difference because we're buying the house for them, all cash.
Could you explain more how that works? It's a very interesting, I've heard about the program before, but.
Sure.
this way they could- that's
Okay, so
very
what
interesting.
happens, you get a client, they want to buy a property, and they have a property to sell. What we do is we pre-approve them, get them all pre-approved. And once we get them pre-approved, we enter them into the NAF Cash program. You guys and your buyer can go out and find a piece of property that you like. We'll make the offer. You guys tell us what the terms want to be, and what you want terms to be. We'll make the offer. We'll buy the property all cash. Okay? And what'll happen is once we buy that property, it'll take us about 2.5 weeks to close it. In the meantime, once we close it, like Dusty said, your buyer can move into the property and do a rent back, and he can put his house up for sale. And he's got about 3 months to actually list and sell. I think we got
But
Can
could
you
you
pay a mortgage on both?
Yeah, could you explain like the?
Yeah, what's gonna happen? What's gonna happen is, once we close the cash transaction, the buyer, or the seller and the buyer, he's the same person, he'll be allowed to move into the property and do a rent back. The rent is not charged until he closes the future home. But we are gonna charge the
Sells
rent.
his old house.
Yeah, closes the house that he has to sell.
And then
Yeah.
we'll sell them that new house.
What did you just say, Dusty? What did you clarify just now?
They can move into the new house and they're not assessed the rent
Yeah.
until they sell their old house.
Till they sell the home?
It's gonna accrue.
Okay.
It'll accrue on a monthly basis.
It's
Actually,
per diem,
Per
yeah.
diem.
So if they live there for 34 days before their old house sells, we'll charge them 34 days worth of rent.
And the rent's equal to what the mortgage payment would be?
We have a formula for it, but I want to say we were doing that $1.7 million house. I think they're paying $6,900 a month in rent. It's reasonable, but it covers our carrying costs for that house.
What other costs are involved in that transaction that you're buying the house for the buyer?
Here's the easiest way to think about it. If it's $1 million house, we're gonna sell it to them for $1,016,000. It's 1.6% cost on the new property when we go to sell it for them, and that covers some. We have operational costs and all that kind of stuff. It's the cheapest program out there by far because we just want to get the loan business.
Now, how about, like, for instance, so you're gonna write the offer, so do we represent you?
Yeah, you're
Yes,
gonna
we
write
do.
the offer, and your buyer is gonna be NAF Cash LLC.
Mhm.
You send it over to us, we sign the offer, you've got a cash offer.
And by the way, that 1.6 service fee that Dusty was talking about, that really pales in comparison to how much you're gonna save as a cash offer. Let's say, I think the national average is 5 or 6% less on a sales price if you have a cash offer. So that 1.6, it gets absorbed, it's not a big deal. It's real interesting, we present this to realtors, sometimes they get it, sometimes they don't. They say, wow, you're gonna charge a 1.6. Well, it allows them negotiating room to buy it all cash and negotiate that price downward.
And deal with the frustration of making 3 or 4 offers on properties
Absolutely.
and getting told to go pound sand because they're contingent.
Right, so
There's no
what,
contingent.
What is the time frame to, oh, you just said it, 2 weeks?
2 weeks.
Yeah, 2 weeks, fast escrow can close.
2 weeks cash sale.
Do you have a pass out that explains this program in bullet points?
You know what, if you give me your card, I'll make sure you'll get a, anybody that's interested, give us your cards and we'll make sure you
Yeah,
get some
something that we
information.
could use as a guideline when we explain it to the
Sure,
clients.
sure. As a realtor, what you would do is you'd have to get certified, and it's a 40-minute class you sit through. Greg, you've sat through it, and it'll answer. I'll actually get on the call with you and listen to it, and if you have any questions, we can afterwards talk about it. Again, once you get certified, you're ready to rock and roll.
From my house.
Certified to do what?
To participate,
offers and
to make
cash
offers
offers.
on the NAF Cash program. We just want to make sure you know all the rules and the guidelines, and
Oh, yeah, I'll have to give you my card, I wanna do that.
yeah. Okay.
And I would say send it to Greg and you can send out the deck to everybody.
Yeah.
And we'll send this deck and the other deck.
On the sheet, sorry, I gave you guys a sheet.
Yep.
Oh, let's see, I'm under,
So, just so you know, Celine is sitting right next to you there.
I've highlighted mine if
She's
you
at
want
number
mine.
12. And
Yeah, my
Wayne's at number 12. Kathy's at number 33.
I'll trade your sheets.
Yeah, here.
Mine's highlighted with the. people
Oh,
that are
great,
here.
okay.
This one too. So.
There you go.
Thank you.
Two of you, here's another one.
All right.
Let me give you my, I have a
And what is
card.
that program called?
It's called NAF Cash. NAF stands for New American Funding, and the cash program that we have, obviously. One of the simplest ways to explain it to your buyers or your sellers is say, look, we're gonna get you an Uncle NAF Cash that has money that's gonna help you buy a piece of property.
It's like having a rich uncle.
Rich uncle.
Uncle Rick, Uncle Rico, yeah.
Uncle Rick. That's one of the owners of the company.
We got four.
I have a Russian oligarch with lots of money.
So, sorry we hijacked it and turned it into a NAF
Yeah,
presentation, but it sounded like it, there's a lot of need for that, and we've done
Well,
some.
especially into this market.
Oh, yeah, you bet. Questions?
On your land acquisition and construction loan, your rate is 8% interest only for 10 years. Right?
No, it's not a acquisition loan. There's, during the construction phase, which will be 12 months, let's say, until they get their certificate of occupancy, they're gonna pay 8% interest only on what's been drawn on it. So on the land and then on the construction as it goes out. And then it gets converted into a 30-year fixed conventional FHA or VA loan like any other loan.
What does it cost just for the acquisition? But it's all one.
It's
not
all one
two
loan.
loans.
So the acquisition and construction are one part, and they're gonna pay interest only on the acquisition and the construction,
And whatever
but it's one loan. Yeah.
So John, maybe think of it this way, it's a line of credit that you'll have access to tap in different phases to acquire the land, to close on that, to draw down on the construction loan as they're completing different phases. And for having that line of credit, however much you have tapped into it, that you have outstanding balance against that line, you'll be paying that 8% on a monthly basis.
And if like rates were really good last month, we locked one in at 7.375. Instead of paying 8% interest only, they're gonna pay 7.375, and then it'll convert into a 30-year fixed at 7.375 or float down if rates get better at that time.
Is there any fees, points, or prepayment penalties?
It's just a normal conventional loan, so there's no prepay. A lot of times we'll charge points to get a lower interest rate, but it doesn't.
It's like a buy down.
Yeah, and there are administration fees and stuff, but it's nothing egregious. This is not a hard money loan. This is institutional FHA, VA conventional.
No.
If you can get us 10 points, we'll take it. But this is set up just like a normal conventional FHA, VA loan. It's
So
it'll
it's
be
not as
affordable.
big a hit like a hard money loan is 2%, 2 points plus 10%.
Whatever we charge, yeah. It's not that.
Well, usually that's my hard money loan, when he charges 2 points plus 10%. And you keep it as long as you want.
He's got a guy named Vinny that collects.
And Vinny collects it, yeah.
Yeah.
So, I want to ask you, can you say a little bit about the appraisal process that's done through this?
Yeah, so we'll send the plans to an appraiser, and the appraiser will appraise the property subject to the improvements. So that's either building a stick-built house, putting a modular home on it, or putting a manufactured home. They'll look at what properties like that are in the area and give us a value for that. And you would hope that if they're gonna do all the construction and take that risk, that it'll appraise for more than what they paid for the land and the construction. But maybe there's a case where it doesn't, but in Southern California it should. Unless they're getting just destroyed by a builder. So they appraise it subject to.
The appraised value of the property, once you've got bare dirt, you have the appraised value of the improvements. And then when it converts to the one-time close, no additional appraisals done at that point in time.
No more approval or anything, they just, it just rolls into conventional 30-year fix, FHA 30-year fix.
So let's just for kicks and giggles, let's assume that the year goes by, they're all moved in, they've already converted to a one-time close, and then that individual is now in the fixed portion, and the values have skyrocketed way up. Is that a time that they should consider doing a refinance? And
All day
take
long.
advantage of the, okay.
Yeah.
So you know, that's something I never asked. Just wanna make sure that they have the flexibility at that.
Well, and it could be like there was a $500,000 acquisition and construction cost,
Yeah.
and they put 5% down, so they put $25,000 into it. And let's say it's worth $800,000. Of course, we're going to refinance that deal and try and get rid of the mortgage insurance. If the market's in that spot, and we're expecting that interest rates will come down in the next 12 to 18 months. We said that 12 months ago, so there's no promises to be made, but it should, and people should see a value of it, and you'll be their hero at that point because they got such a good deal.
They're talking about raising interest rates, the Fed raising by a quarter because the inflation's going back up. So, yeah, so much for your theory. I wish it was true.
So with your servicing
Bill.
department, just, and that you just go off on a tangent, go ahead. The servicing department, let's say the values of real estate increase, would they automatically reach out? No, so it'd be up to the.
It follows Fannie Mae rules for mortgage insurance. So if you want to get rid of mortgage insurance in the first 2 years, you're pretty much squeezed out unless you pay the loan down to 80% of the whatever the appraised value was when you did the loan. But after 2 years, you can ask for a new appraisal and have it reviewed to remove the mortgage insurance. So you have to wait 2 years. We have a lot of people we did 3% mortgage loans on, and they were stuck with PMI, and now they're being able to get rid of it without refinancing. Same kind of thing here. Yeah.
Now, you're crashing about like, you know, U.S. Bank, and if you go to a $5 million home, you go to U.S. Bank, but if you go to you, what's your niche market? Under $1 million or what?
Yeah.
I'd say that's right.
Under $1 million is the number?
Yeah.
I mean, you could do a VA construction loan that would be bigger than that because VA has no limit on the loan amount. But really our sweet spot's going to be doing conventional FHA VA loans, and in Orange County, that's a loan up to $1,149,000.
The VA, no money down, I can build a house with no money down.
Yeah.
That'd be beautiful.
Better join the Navy.
I'm gonna join the Navy. And I have a couple of guys in VA, they wanna buy a house. So maybe they build a house with no money down.
How many have you done like this? I've seen the remodel ones, but I've never seen the new construction.
So Evelyn on my team, she gets all the call center turn downs for construction nationwide. She's licensed in 50 states. I think she's got about 15 of these going, and she closes about 1 or 2 a month for the last 6 months.
So this is a new product, VA product, right?
It's new for my office, but we've been doing renovation loans for the last 10 years. That's FHA, 203K loans and that kind of stuff. We don't do a whole lot of that business in Southern California, but we have the experience with the renovation, putting together a construction project, talking people through the conceptual thing of doing this, which isn't always super easy to get people to wrap their minds around it. We've all been wrapping our head around it over the last 45 minutes. And you guys are all professionals that have a good idea about it. Imagine somebody who works as a checker in Arkansas and talking them through this process on the phone. Like that takes some that's like.
So it's the same typical underwriting where you have to have stamped and approved plans, ready to go, principal residence only. Yeah, and it can't be a rental.
We don't do
Like a
investment properties.
duplex.
We'll do
If
second
they live in
homes.
one, can they?
Yeah.
You know.
Yeah.
So you had a 4-plex or 6-plex, and you're gonna
Not 6,
Not a
not
6.
over 4.
Yeah,
not over 4.
Yeah.
1 to 4.
Okay. Fannie
Residential.
Mae, Freddie Mac guidelines.
Yes. Mm-hmm.
What about SB 9? Well, if the guy wants to live in one, not and build the
Yeah,
other.
that's fine.
Yeah.
That's a.
But for a lot of those people, like your guy in La Habra, they might have equity and do a line of credit. But if it's on acquisition of land and they want to build units, let's build some units with an FHA.
I've got a
loan.
harbor, and I sold about 33,000 square feet in Fulton, and it's gonna be subdivided in SB 9. You're gonna build 4,000 square foot home on one side, 4,000 on the other. is to split the lot in the middle.
You just do some math, $300 a square foot. That's gonna be a little too big for
you, yeah.
us, yeah. And they're probably gonna wanna go to a US bank or Umpqua Bank or somebody.
Okay.
We can help them find somebody who does a good job. I know somebody at US Bank that just does renovation and construction. That's all she has done for the last 25 years.
Okay.
We'll be happy to direct traffic on that
Okay.
kind of situation. Phil probably has some good connections as well.
Interesting.
Yeah.
And as a V, yeah, I didn't realize VA was even interested in any of that stuff.
Oh yeah.
Sure.
But you said there's no limit on the amount. What's the loan to value?
100% for VA.
No, for the construction, future value, what do they base it on?
The value of the constructed project.
The value of the construction project.
After the house is built, they do an appraisal subject to everything being done.
So you got permanent financing on the back end.
It rolls into a permanent loan after we get the certificate of occupancy.
Okay, yeah, so it's definitely yeah, okay. Full doc,
Yeah.
okay.
Yeah.
All right, so are any more Dusty, if you have any cards with you that you need to pass around, please do so.
Well, get with Phil. He'll take all the leads, and I'll help him if it's construction.
Yeah, we're gonna teamwork this
Yeah.
stuff, so.
Yeah.
He'll
Yeah,
get
I'll
the
be the
bars
front
all
guy
set
and
up.
just-
We'll walk through the collateral with the
Well, what's that,
client.
that program you said cash, what?
NAF Cash.
NAF.
NAF CASH.
Where are the interest rates at with the VA? This is probably a question nobody asked you. Are they
It's
prime
whatever.
Prime plus one?
So it's a VA loan. It's a 30-year. It'll turn into a 30-year fix at whatever market rates are. So I think in a VA loan right now would be in the high
But
sixes.
during the construction phase, is it prime plus one?
8% interest only right now.
8%.
And that varies just wherever the market was. We did one about 6 months ago. Rates were 7.25%, interest only. And so as the Fed lowers their rates, our cost of capital goes down. Those interest rates will go down. But it's not like a bank construction loan where you're paying prime plus 2 or whatever, or prime plus 1. It'll be a set interest rate through the whole construction period.
Phil, do you want
Yeah, have you done the NAF Cash
office
program?
number or cell number given out?
Cell number.
All
Yeah,
right,
use my
Phil's
cell.
number is 714
That's amazing.
612 5054.
Everybody have my card? I think I passed
Yeah.
it.
Explain the NAF cash to William here.
Okay, so imagine you have a seller that owns a $2 million house and they want it.
We don't have to go through it, I guess.
Business card right We'll do it after.
Help
Yeah.
It's amazing. You think, write the check.
Give me a call. I
Yeah.
can walk you through it. Yeah, it really is.
I love
Again,
it.
it's a rich uncle. It's rich Uncle NAF Cash.
They'll
So
pay cash for the home, and they'll buy it, and then you'll finance it later after you sell your home.
So if Phil and Dusty want to stay and see what we do here, listen to all our pontifications.
yeah, I think we have a checker game that is starting pretty soon.
I don't know.
Just
They have to be
kidding.
certified.
I-
So you have to get on the list.
Is it okay if we excuse ourselves? I know Dusty's got
Yeah. No, it's fine.
Green
That's why
passing.
I
Okay.
make the invitation if you want to.
We have a lot of people that are veterans
Mhm.
that we're working with.
We're happy to work with all of them. Yeah.
This is interesting,
Yeah.
because we're DVB certified for public works stuff.
Okay.
It's been a long haul trying to get that done.
All right.
Take a business card and you can ask them more questions.
Yeah. Just reach out to Phil. We'll make sure you get the presentation on the construction and the NAF Cash to reference in the future, and then send that out to everybody on the list. And if anybody has any questions, just follow up with Phil, and he'll take good care of you.
So today's presentation, we have a YouTube account.